presented by National Stock Exchange.
Look, this investment Guru's tips will double your money. Just claim the offer.
Double your money from any random group. Pay attention. Promising double returns, they'll lure you in tight. Unverified groups will send fake tips overnight, emptying your pockets before you can fight.
Well said! Well said! Well said!
SEBI and NSE advise consult only SEBI registered advisors and make payments only to verified accounts or UPI IDs. An investor awareness initiative by SEBI and NSE.
You're with us here on Business Today. I'm Aabha Bakaya. We count you, of course, down to market opening. It is Friday, and we're looking forward to what the action will be like this morning. It's been a decent week, a fairly earnings-heavy week at that, and watching out now to see how we'll perhaps close and what we can look forward to for the week ahead. Lots of key developments, on the macro side, with the new inflation composition also showing inflation at very low levels. We've seen a lot of movement in IT overnight, big deals in the IT space, but equally a lot of concern over AI, and that's why you're seeing that complete rout on Wall Street overnight. S&P 500, Nasdaq, Dow Jones, all of them down 1.5% to 2%. We've got Shell also joining us this morning. Shell, good to have you with us. It's IT again. I would lay my bets on it that on opening we're going to see a mega rout.
You were saying something.
Go ahead, Shell.
You were saying something.
I was just saying that there's a pain quotient that's getting filled up in the IT space.
That's getting filled up in the IT space. Lots of breakdowns happening on the Nasdaq as well, and that's the mothership for domestic IT. Look at the Infosys ADR down 8% overnight, and that pain is going to get reflected in Indian markets. Infosys is already trading at April 2025 lows. TCS is at a 5-year low. This is coming in. IT will also push the Nifty lower because it is a major component in terms of weightage. So that's the pain point we are looking at. Private sector banks and public sector banks are showing strength, as also metals. So that's the long side, and the short side is IT.
Okay. Some results to watch out for. Coal India, Hindalco, IRCTC, Biocon, Lupin. Hindalco, in fact, India business has looked good. Novelis disruption weighing a little bit on performance. So some of these numbers to keep an eye on. And I'm just going to keep coming back to AI, actually, because that's really where a lot of the action is. OpenAI has said that China's DeepSeek has trained its AI by distilling US models. That's some buzz there. We've got analysts who've been talking about AI and who've been refraining from calling out the tech bubble, now changing their minds. You've got the big deal coming in from Anthropic. So lots is happening in that space. Outside of that, oh my God, look at the kind of cuts that we're seeing in pre-open. Infi's down 8% right now in pre-open, 7.5% to be exact. You've got Tech Mahindra down a little over 2%. Let's take you through all of the key names there. Wipro's down close to 4% as well. Remember, Infi's also listed overseas, so is seeing a harder knock. HCL Tech is down about 4.5% right now. We've got the Rupee opening lower, 90.67 after marginal appreciation yesterday, so that's also opening lower today. Nifty is clearly going to be under pressure in pre-open this morning. Complete rout seen across some of those IT names today. We'll keep coming back to that, of course, but let's talk about maybe Hindalco for a moment, Shell, because you talked about metals. Hindalco, we've got consolidated net profit down 45%, consol revenue up 14%. The net profit includes a one-time cost of 2,610 crores, and they're also looking to infuse about $1 billion as equity in Novelis versus $750 million earlier. So, what do you think the markets are going to make of these numbers?
Well, Aabha, what will happen is that a mild downtick will be visible in Hindalco, and people will latch on to this lower prices for the long side. The stock has already cooled from about 1029 to all the way down to about 958, 948 in early deals. So this gap down is most likely to be purchased. See, you have to sort of keep two sectors up to keep the index afloat. So they are banks and they are metals. To some extent, the PSE segment as well. And IT is down. So you thrash IT lower and you push metals and banks higher. And once the metals and banks cool off, you buy the dip there as well. That's the structure of the market. 26,000 is not going away in favor of bulls, and 25,800, 25,700 is where the bulls step in to push the market higher. So it's a range bound trade. Metals and banks on the long side at dips, and IT sell every rise and thrash every bottom. That's it.
All right, sell, sell, sell. That's the view coming in on IT this morning. A few other earnings that I've got for you. Let's take you through those as well, just to know what all to watch out for in the markets this morning. Indian hotels, let's take a look at that. And remember, this stock has been a constant favorite. Just pulling up those numbers. I think I've just lost them on my screen. There you go. Q3 console net profit up 55%. Console revenue up 12% on a year. And those are pretty good numbers coming in from Indian hotels. It's always been a market favorite, but we'll talk to our guests about the valuations there. That could be something that's keeping the stock a little muted this morning. We've got defense. Bharat Forge is expecting strong growth following the US-India pact. We've got HAL seeing mixed views from brokerages right now. Bharat Forge also saying defense may be 18 to 20% of revenue by 2030, and it's actually up from 11% now. So let's take a look at Bharat Forge as well. So lots of key commentary coming in there. It's up about 2% today. And the defense panel has approved purchases worth 3.6 lakh crore for the Army, Navy, Air Force, MOD to buy 8 Dornier 228 aircraft from HAL for 2,312 crore rupees. So that's the news coming in on HAL. How's it looking on the charts, Shell?
HAL, yes, Aabha. So this transaction which is on the Rafael deal is a shot in the arm for HAL. Remember, till 1 week ago, there was just too much of pain. HAL had been pushed out of the AMCA deal that was there, and then there was this news of Tejas aircraft that was promised in March of 2025, delayed beyond May 2026. So that had pushed the stock lower to 4,000, and from then on you see this weakness coming in. So 4,000 was actually April 7, 2025. So it was a 1 year low, and now this is a shot in the arm for HAL because a Rafale deal and assembly in India would essentially mean HAL gets more business, and the earnings that came in 2 days ago was also pretty good. So support coming in at a 1 year low for HAL. Aabha.
Okay, that's on HAL. All right. HAL currently trading at 4189. We're about 5-6 minutes away from opening at this point of time. And, Shell, if we take a look at the week gone by, do you think we could classify this as maybe an earnings focused week? Because all the key triggers are behind us. So apart from, of course, what's happening in IT, and that's critical, we've seen some positive momentum on the back of the trade deal. We've had the budget behind us, any kind of move that we were expecting to see on an agri or any other, pocket of the market has kind of already been priced in now. So what's going to be the next trigger that the market's really going to be tracking?
Absolutely, Aabha, you're right. 4 major events passed through in the last fortnight. This also includes the RBI credit policy, Indo-US trade deal, national budget, and the EU trade deal before that. Now, I think the biggest hurdle that we have is that one part of the index heavyweight market, which is IT, is in terrible shape. I mean, each day you read anything about artificial intelligence, it takes the pants off Infosys and TCS. There has been no comment coming in from these companies as well. So you can only hope for buybacks to come in. They're not doing anything in R&D. They're not doing anything in AI. So that's the pain point. But market is light. FIs are buying, and more importantly, the rupee has stopped to depreciate further. So maybe minus IT, the market will move up thanks to PSU and public sector banks plus financial services. So that's the long trade on the market. Banks, both public and private, PSEs, and of course the entire metal setup. And minus is IT.
Okay, I think Mayuresh Joshi is also joining us. Mayuresh, good morning. What's happening with IT? Let's talk about that. I don't know if there's anything else we should be talking about this morning.
Yeah, I think the disruption continues, Aabha, as simple as that. And this will keep on happening over the next few weeks, months, whether we like it or not. And therefore, I think the sector is going through a massive shakeout, looking at the news that is coming through every passing day. It is going to create a huge disruption. There are no two ways about it. There is accelerated capex that has been announced by all major platform companies and product companies across the globe. And therefore, the race to create a better AI agentic agent, to create better application layers, might create huge disruption, not just for the sector and across domains that the sector operates in, but also for the end user industries in general. So I think huge disruptor at play. So I think you need to probably just wait on the sidelines and watch on what is happening. It's a falling knife as we speak.
Mayuresh, let's just dig this further. In the pre-open, 5-6% downticks from the sell-off that's already happened on TCS and Infosys. For heads of research and equity strategists such as you, is there a buy point for long-term or medium-term investors in TCS and Infosys, or are you staying away?
So to answer your question, Shel, I think two things. One, I think in terms of the disruptive factors at play globally, I think our companies are getting hit significantly as well. Is the price damage largely done? It seemed to be the case a couple of days back, but the recent news again has led to a sell-off. So I think there are two things emanating from all this, what we are seeing. In terms of our traditional models, our IT companies need to shift fast and very, very aggressively. If they intend to do that, I think there's going to be a huge amount of capex spend that actually comes in from their budgets. And therefore, I think the traditional models in terms of buybacks, dividends, that might take a huge backseat. If that probably happens in the current scenario and avatar that we're probably looking at, orders might still keep on coming in, though pricing and margins might still remain circumspect. Growth probably remains circumspect as we speak, looking at an FY28 exit in the current avatar if we operate out of. And therefore, if the business models change, there will be derating in terms of valuation multiples as we look and exit FY28. If there is an accelerated capex, that probably happens, and models change in terms of application layers and investments needed to get created by our IT companies as we speak, there is obviously going to be some element of earnings impact in the traditional business as well. So it's a typical catch-22 situation that the sector will now go through. The worst is probably over. Maybe after this, it might go into a time consolidation, but whether you go and aggressively buy out there, I really don't think so at this point of time. Maybe consolidation is the mantra for IT.
All right, there you have it on your screen, down 0.8% this morning. Now, most of that pressure is coming from IT, and that's pretty clear. Infi itself is down 7-8%. The Nifty bank is steady at this point of time, and there you have it. The IT index is down about 5%. So we all know where the pressure is coming from. Remember, US markets overnight also seeing a dismal performance on the back of all the concerns around AI and the re-ratings that are currently going on, and all the news that's coming out as well. TCS is now down 6%. So that's where a lot of the heavy pressure has built up, and Wipro continues to be down about 4% as well. It's like Mayuresh said, it is a falling knife, And the metal index is also seeing pressure. That might be Hindalco there. We were talking about that. And the mid cap of the broader markets also not looking good at all today. It's, there's so much to discuss here. We'll just come back to it with Mayuresh. I'm sure the advance decline ratio is not looking all that positive, but those are a few of the names on the upside today, and just a handful there. Mayuresh, let's talk about Hindalco for a moment. Its earnings, it's putting money into Novelis. What's the market reading into here? It's down about 5%.
No, so the domestic business, Aabha, has stood out very well. So I think there is a very strong financial performance and operating metrics as far as the domestic business is concerned. For Novelis, obviously, they had that maintenance hit. The business probably seems to be on a decent track as we speak. Aluminum prices seem to be on an uptrend. As we head into a Q3 exit, and Q4 prices are looking stable as well. Therefore, I think the entire take is that domestic business will continue doing well. The global business, if you probably have these one-offs and then the impact removed from Q3, if aluminum prices are stable and make an uptick, I think that creates a definite leverage as far as the global business is concerned. But there are too many moving parts for how LME prices will probably move. The tariff impositions across countries, what probably happens in terms of the trade impact from a macro perspective of that is all going to have a say. But generally, I think the results, even from a Novelis perspective, I think they should be probably stable. But at least at this juncture, Aabha, from the pack in general, I think we are very, very selective. And we probably like the ferrous space a tad bit more than the base metal space, primarily led by the fact that numbers have been exceptionally good for the ferrous players as well on the domestic side. They're expecting better numbers in terms of volumes and value in Q4. Integrated operations, obviously, a bet. Margin performance as well. And the safeguard duties will also aid top line growth where price hikes have already taken place. And a stable margin might actually mean that debt probably starts coming off, leverage gets paid off, leading to better cash flows. So at this juncture, inclined to be selective within the ferrous space as far as the entire metals pack is concerned.
I think we need to mark the market as far as the IT space is concerned. So a gap down on about 8% on Infosys. Now here is the interesting part. Short covering takes place. People who had gone naked short on Infosys yesterday evening are now covering those gains, and therefore you see this bounce back happening from a low of about 1285. Infosys has a 1321. Ditto for the IT index, a low of 31,500, now someone at 31,900. So this is short covering. People will again use the opportunity of the stock coming up because of short covering and then thrash it lower. Very, very heavy volumes there. Look at HAL, Aabha, almost a gap up opening, 4202 for you. This is in strength, about 1%, and Bharat Forge. The entire defense play is in top shape. Please keep an eye out on Bharat Forge, and this is a question that goes to Mayuresh. A view on this company, which is at a record high post its earnings.
So I think the entire business model has been tweaked, Shell, over the last few years. So I think the over-dependence in terms of Class 7, Class 8 trucks in the US have slowly been diversified. They've got decent orders as far as defense is concerned. They are ramping up their orders as far as railways is concerned as well. And therefore, I think if you probably have a sum of parts done, the expectations in terms of Class 7, Class 8 trucks actually doing reasonably well. I think the Section 232 norms also might not apply, which means that the lower tariff also gets applied to companies like a Bharat Forge and RK Forge who are supplying these autos and auto components. And that probably is a beneficial impact and aspect as well. As far as the domestic business is concerned, kind of defense order book and the ramping up of the railway order book will mean that margins are relatively better as well. And with better execution, I think the working capital days probably remain in check. So rating rankings look absolutely fine as we speak. Bharat Forge, anybody holding should continue to hold.
Okay, so defense continuing to look good, and that's the one pocket, in fact, that's in focus. By the way, the AI summit is on in Delhi next week, and it's bringing together global leaders in the space, including the Anthropic CEO. So we've got lots of dialogue that's potentially going to be coming out of that, and we'll keep an eye, because just look at the way IT is slumping across the world this morning. In the Nifty, IT itself down about 4.5%, 5% on an infy. I'm just sort of keeping my eye on those charts, Mayuresh, because 4-5% cuts across the board on IT stocks is kind of rubbing my eyes at this point. But if we're going to be seeing this kind of pressure on IT, where are we seeing the support coming from? And we're not really seeing it anywhere. Not from FMCG, not from a Reliance ONGC, not from an SBI. I mean, in the sense, everything's steady, but we're not seeing any runaway moves. We can't even turn our attention to the broader markets. Look at the mid cap and small cap today. Both those indices are down over 1%.
No, so I think it's a general feel, right? Because of what is happening to the IT sector as a whole, what is happening globally as well in terms of the news flow. I think investors do become a little jittery, and as sentiments probably play a large part, there is some element of profit bookings that starts creeping in. But if you probably look at the construct that the market is now getting into, I think from a sentiment perspective, the US trade deal has worked in favor of India. The the EU FTA obviously is abetting. We are hearing news of an FTA with the Middle Eastern countries as well. And therefore, I think from a safety net mechanism, as far as our exporters are concerned, I think that safety net has very well come in. As far as our domestic sectors are concerned, the push through in the budget in terms of the capex spend that has happened is largely going to aid a large part of accelerated investments from the private sector as we speak. We've been hearing comments from the RBA as well in the recent monetary policy that the utilization levels have inched up as we speak, with further investments expected to come through both from the government and the private side. I think that is going to have a definite boost in terms of investment-led GDP growth. The consumption levers are already on, and the expectations as we head into this calendar year, with a lot of elections expected to happen, my own sense is that MSP prices will go higher. There is expectations of a good Rabi output as we speak, and expectations of a reasonable Kharif crop as we head into the monsoon season next year will mean inflation stays in control. At the same time, I think discretionary incomes and spends from tier 2, tier 3 cities should be on the upswing as well. And therefore, all the enabling levers from an India perspective, considering how the globe is behaving at this point of time, both from a political and economic aspect, India seems to be a tad bit better placed. Again, to the notion in terms of a 10% GDP estimate, my own sense is that if you're able to perform better in terms of all these aspects put together and corporate earnings show an upswing, the nominal GDP can actually surprise us on the upside, which creates a base case scenario for India actually standing out. Now, the weakling is going to be IT as we speak. What does that get compensated with? Banks will offer strong support in terms of financial growth over the next few quarters and years. And at the same time, I think consumption as a theme should continue driving India's GDP. So I think I'm not too perturbed about what is happening to the globe. We will get hit if the globe gets hit, but it will be temporary in the Indian aspect. I think leadership stocks across these key sectors might actually stand out as we head into the next calendar year.
It's interesting, Aabha, that you haven't marked gold and silver at the beginning of your conversation. Silver now down 6% as far as MCX is concerned, and what you see is a price of somewhere like 241801. I'm talking about Bs being down, Nifty Silver Bs. So please keep an eye out on that one. And two stocks I'd like to mark. A blowout happening on Engineers India, led by a very sharp uptick in earnings. Quarterly profit is up 220% at 347 crores, and sales are up 58% for the quarter gone by at 1210 crores. So this is something that needs to be looked at. And there is a massive downtick on Muthoot Finance as well. This is one of those breakout stocks that we've been tracking for a while, but what we see is a very sharp 9% dip in 9% dip in the stock. Mayuresh, your view? Profit raised 102%, and sales were also up 58% for the quarter gone by. Earnings coming in yesterday. Your view on Muthoot Finance and Engineers India?
No, engineers had a stronger quarter, Shell. And again, I think the entire theme and the thesis in terms of the capex spend, the budgetary allocations, expectations of more orders coming their way, margins actually coming in at a decent number as well, as far as new orders are expected to come through, will create the impetus that the cash flows probably need. For Muthoot, strong numbers, but again, I think the volatility in gold prices is something that is hitting them pretty hard. And therefore, I think if gold prices crash as we speak, overnight, Shell, there has been news, and I don't know how to authenticate this. I think you're in a better position, that Putin probably has had a meeting with Trump, and that they are arranging, are getting into some sort of an arrangement across a lot of commodities and products as well. So I think that is what is creating that jitters additionally on the global news front. However, I think the volatility in gold prices is something that is dragging Muthoot down as we speak.
Okay, so what did you make of Indian Hotels numbers, Mayuresh?
Decent, Aabha. And again, I think if you look at a couple of quarters down the line, I think they had pegged in an FY30 estimate as well. So if you go on the FY30 estimate of Indian Hotels in terms of top line, in terms of expectations of how the operational metrics are going to probably play out, from the current valuation standpoint, and if you probably peg in and start discounting FY30 numbers, fairly priced. However, I think from an industry perspective, still maintains that leadership position. The expectations in terms of the unorganized sector probably getting dominated by the organized players over the next few years seems to be a base case reality. And therefore, I think even if valuations probably are a tad bit on an average as far as standard deviations are concerned, because of its leadership position and the expectations of the organized sector expected to do well, I think the rating rankings stand out to be fabulous for Indian Hotels. So I think anybody holding should continue.
$9.27, ladies and gentlemen, the first 10 odd minutes of trade are over, and one standout stock which we haven't discussed with Mayuresh is State Bank of India. Mayuresh, State Bank of India, or Bank on the State, is an amazing stock that is finally getting its due from the market, be it because of Nifty and Bank Nifty rebalancing or the phenomenal numbers that this giant is pulling up. What do you think of the medium-term prospects of this banking giant?
So the elephant is running. It's not just walking, Shell. And the numbers have been fabulous for State Bank of India. I think on any metric, you can't complain on how the numbers have been. And therefore, I think from an operational perspective, it looks pretty strong. In fact, the guidance that they've given for NIMs to be at 3%, which is higher than what they reported in Q3, will give a lot of respite to the street as well. They're expecting the loan growth to actually move 13 to 15%. And therefore, that's a strong outlook that State Bank has driven. One more interesting aspect is the YONO part, the digital banking part, where they've almost got 10 crore customers coming in. Gen Z, millennials is what they are probably targeting through the YONO accounts, and a lot of offers as I see it. So it's going to be very, very interesting on how YONO probably shapes up along with the traditional banking business and the legacy accounts that they probably carry. But a fabulous set, valuations still not expensive as we speak compared to the large private banks. And therefore it's 100% rating matches on our Market Smith ratings as well. So anybody holding should continue holding State Bank.
Fair point. So that's the view that is coming in on State Bank of India. And Mayuresh, before I let you go, a view that you might have on stocks such as Bajaj Finance, a very good commentary coming in post earnings on the use of AI. The stock has also bounced, but from very low levels. Something that you would hold or view for the next 12 months or so, as far as the benefits of AI are concerned to corporate India?
So from a Bajaj Finance perspective, I think they have been incorporating a lot of tech share over the last few quarters and years. And I think that tech-enabled processes that they're probably adopting will lead to two aspects. One, I think in terms of revenue growth, because of the tech processes, we'll obviously see an uptake, and cost efficiencies come in pretty efficiently as well. And that probably has an impact in terms of margins and the overall cash flows. So Bajaj Finance, yes, anybody holding along with Shriram Finance, I think the two top leadership stocks within the NBFC space is something to watch out for. My own sense is, Shell, that AI adoption is a given. It is something that all of us have to live and contend with.
Yes.
And therefore, it's a positive. If you take it positively, I think from an application perspective in your enterprise, in the areas that you operate out of, it will lead to incremental benefits. In our own sense at Markets with India, I think we are deploying a lot of AI, which is creating a lot of positiveness in terms of filters and the stock shortlists that probably happen. And it reduces a lot of time from an analyst perspective in terms of scanning through a lot of pages and reports as well. So I think it's an enabler. It's how we embrace it to take forward the applications there.
Okay, ladies and gentlemen, what we'll do is we'll thank Mayuresh at this point of time and welcome Kunal Parar, Vice President for Technical Research at Choice Equity Broking. Meanwhile, the markets are not exactly in the best shape that you would look to. A gap down on the Nifty, which is now 1% down. 241 points is what the Nifty is lost at 25,563. There is pain across the board, and that's primarily because of the sell-off that we've seen in the IT index, which itself is now down about 4.5%. Remember, this is third, fourth day of successive, very, very heavy selling that is coming into the IT index, 31,677. The Lal Street is in a deep shade of red. Only 313 shares are in the green versus 2100 in the red. So it's a very bad 1:7 advanced decline ratio. 7 stocks falling for every one that is up. And it's carnage on the metals index as well, 3% down because of Hindalco. Small cap index is 2% down, and the mid cap index is 1.6% down. As good a time as any, or as bad a time as any, to introduce Kunal. Good morning to you, Mr. Parar. How is sentiment on technical charts as far as markets are concerned?
Good morning, Salji. Well, sentiment is like on a lower level. Nifty is trading at 25,565. Further downside would be there, and this disruption is because of AI, and I think further downside would be there because no clear-cut sign is there, because Nifty is trading below its 20 mm, and if you talk about early chart, then it is trading below its 50 and 100 mm. So clear-cut signal for further downside momentum. Not only this, Nifty created a gap up opening on 3rd Feb, and I think if this will continue further, then Nifty even may fill this gap. So we talk about level wise, then downside Nifty may further slip up to the level of 25,430, and if Nifty break this level, then further downside would be there even up to the level of 25,100. So across the board, I think sentiment is negative only.
Okay. At this point of time, ladies and gentlemen, let me take the opportunity to mark new highs in the market. They may 52-week highs or record highs depending upon what the stock is. This is critical to watch because at a time when the market is falling, there are stocks that are outperforming and swinging to record peaks. Starting with Bharat Forge, 1.7% higher. As also State Bank of India, fresh record high here. There's no stopping Shriram Finance. Remember, you just might see fresh selling pressure here, but these are record highs where people are using the opportunity at the peak to sell calls or buy puts. Kirloskar Engineering, 2.85% higher, 1375. Shadowfax, this is a new IPO, doing pretty well, 2.2% higher, 127. And of course, you have companies like Avanti Feeds, down 5.5% after hitting a record high. So that's the state of play as far as markets are concerned at this point of time. Kunalji, any two stocks that you would like to highlight as far as long or short positions can be taken?
Well, first let's talk on the long side only because I think viewers are waiting for long side entry only, and one should focus on the SBI Live. Right now, stock is trading at 2036. The way stock has been trading on its daily chart for the upside would be there. The technical chart looks very attractive because stock is trading about 50 and 100 days of moving average. Not only this, stock is trying to break its intermediate high, which is placed at 2035. So view is on bullish side only. One can get into the stock at present level 2038 SBI Live. Target wise, first target comes at 2065, and if stock break this level, then further upside would be there up to the level of 2100. Whereas if you talk about SL side, then downside strong support comes at 2000. So one can go for long in SBI Live. And if you talk about short side, then I think one should focus on Asian Paint. Right, Asian Paint is trading 2400. Now this stock is directly related to crude oil. If crude oil goes up, then we may see some downside in Asian Paints, and if goes down, then we may see some upside in Asian Paints. But overall structure of this counter looks very weak at present level. Right now stock is trading at 2398 level. One can go for short at present level. If we talk about SL wise, then first one can keep SL at 2430, which is its previous top. Now if we talk about target wise, first target comes at 2370, 2370, and if stock break this level, then further downside would be there even up to the level of 2330. So one can go for short in Asian Paint at present level, and for long, then SBI Live looks very attractive at present level.
Okay, let's focus on where volume and pricing is building up. Look at Tech Mahindra. The stock actually hit an intraday low of 1464 and is now at 1503. So that's 36 plus 3, 39 rupee recovery. Is it because of short covering? Is it because of the stock is offering value after trading near November 2025 lows? Only time will tell, but that's the state of play as far as Tech Mahindra is concerned. Days high 1505. Only time will tell, but slippages in Coforge 1349. You have persistence also falling from days low, now at 5268. Days high was 5360. So as I have been saying, all gap downs are getting sold into, and once the stock recovers to some extent, it's then sold as well. Banks holding the Nifty higher. Look at HDFC Bank, look at ICICI Bank, and look at the strength that is coming into State Bank of India. So that's the state of play for the markets as of now. Kunalji, anything that you are observing?
Well, yes. If you talk about Nifty 200, I think few stocks are there which looks very attractive, and trading at day highs, and stock is HL because yesterday we got the news about the defense, and government has approved some good purchasing, and I think HL will be in the focus for medium term as well because of this purchase. One should focus on this stock. Right now stock is trading at 4196 level, and daily chart looks very attractive. Fundamental is very attractive, and yesterday's government's purchase is also looking at very lucrative level. So I think this stock will be in limelight for at least for a month, 1 to 2 months. Right now stock is trading at 4193 level. Recently stock gave a very good correction from the level of 4700 to 3950 level, and stock took the support at very good level support. Right now stock is trading at 4190. One can get into the stock at present level. If you talk about SL wise, downside strong support comes at for timing 4090, and if you talk about target wise, first target would be at 4290, and if stock break this level, then further upside would be there up to the level of 4470. So I think one should focus on defense sector, because at this level the way government is purchasing, the way government is acquiring all the equipments, I think indirectly government is supporting these defense companies. So I think HL would be the perfect level for creating any long position.
Okay, banks, as I have been pointing out, are helping the Nifty sort of prevent this collapse that's in the market. HDFC Bank is now coming up in the green, what you see is 920.55. This is after almost 7-10 days of consistent selling pressure. Who would have thought that HDFC Bank would be available below 365-day moving average, and this is again a fortnight low. So index heavyweights helping the Nifty on its way up. Look at Axis Bank, 1346. Remember, in this fortnight which has just passed, HDFC Bank hit a record high of 1418. A view on these two stocks, Kunalji. HDFC Bank below 200-day DMA and Axis Bank available around 21 EMA. What are your charts telling you?
Well, if we talk about HDFC right now trading at 920 level, stock made its low at 911, exactly where stock open its trading. Right now, stock is trying to cover its downside momentum, trading at 920 level. But at present level, I think one should avoid, because overall selling pressure is there across the counters, and I'm not seeing any further upside momentum in this counter based on the overall negative sentiment that is preventing the market right now. So please avoid this stock, HDFC Bank, as of now for trading perspective only. And if you talk about Axis Bank, Axis Bank is trading at 1339 level. Stock has a very strong support at 1305 level, 1305 level. Any fall up to the level of 1320, 1320 would become a good buying opportunity. It's not at present level, but at 1320 level with strict stop loss of 1300. If you talk about target wise, then good bounce back would be there up to the level of 1360, and if stock break this level, then further upside would be there up to the level of 1400. So if you compare both the counters side by side, then Axis Bank looks very attractive compared to HDFC Bank, and may outperform the overall private counters as well.
Okay, fair point. So that's the view that is coming in on HDFC Bank and Axis Bank. What is also interesting is the way Indian Bank is moving. We've seen a low of 865 and now at 871. Remember, the stock has seen profit booking from 920, 915 levels. So this is how the index is being supported on its way up. Massive selling in IT, and private and public sector banks are helping it on its way up. A view that you might offer on Engineers India, Kunalji, very strong earnings and a 12% bounce back.
Well, Engineers India trading at 203 level, outperforming the overall market by a 12%, gave it a gap opening. And the way stock has been trading in its daily chart with the breakaway gap, I think further upside would be that it may march towards the level of 210, and if stock break this level, then further upside would be there even up to the level of 231. But biggest question is whether this is the perfect level to get into the stock or not. So I'm not suggesting to get into the stock at present level, because risk reward is not in favor for creating any long position. But if you have this stock in your portfolio, then hold this stock. We may see some good upside momentum even up to the level of 231.
Okay, so that's the view that is there. Kunal, thank you for your time. This is as good a time. The first half an hour has lapsed. We'll wrap up the markets at these levels. Selling pressure unabated. The Nifty, ladies and gentlemen, is down 250 points now, 25,560, and that pain is only and only because of the massacre that's happening on IT stocks. Infosys 5.5% lower, contributing 77 negative points to Nifty. TCS 4.4% lower, contributing negative 35 points. HCL Tech also contributing 19 points. Adding to this carnage is Reliance, which is down about 0.5%, index heavyweight, and of course bad earnings at Hindalco, pushing the stock 5.5% lower. So this is the state of play in the first half an hour of trade. Heavy selling. Look at the volume on Infosys. It's the top traded counter. 1382 crores already traded. On TCS, 931 crores already traded, and on Muthoot Finance, 825 crores already traded. Banks are helping out the Nifty, but it seems to be a dull, dark day favoring bears on the Lal Street. We'll close it here and then come back very quickly on BTTV. Please stay glued.
Presented by National Stock Exchange.
Look, this investment guru's tips will double your money. Just claim the offer.
Double your money from any random group. Pay attention. Promising double returns, they'll lure you in tight. Unverified groups will send fake tips overnight, emptying your pockets before you can fight.
Visit! Visit! Visit!
SEBI and NSE advise consult only SEBI registered advisors and make payments only to verified accounts or UPI IDs. An investor awareness initiative by SEBI and NSE.